Hey everyone, welcome back to Corporate Decoder, the place where we decode those dense corporate filings and figure out what they actually mean for the companies we care about. In this video, we're diving deep into ORIGIN Ltd's latest annual report. And let me tell you, this one has some twists and turns that would make a crypto roller coaster blush. So what is the big story with ORIGIN? Well, after a period of ceasing Bitcoin mining operations due to high costs, they've pivoted hard, launching a dedicated Dogecoin treasury program in July 2025. Yep, Dogecoin is now their core asset and they are building an entire ecosystem around it. We're talking payment solutions, a computing power network, and even cultural asset applications all revolving around Doge. Think of it as going all in on a meme coin backed by institutional financing. Can they pull it off? Let's break down their financials and see. First up, let's hit the balance sheet. As of the 30th of June 2025, ORIGIN reports a little over $3.5 million in total assets now. That might sound small, but what is really striking is their cash position. It's a mere $55,639. That is extremely tight. Just a year prior, they had over $1.4 million in cash. That is a massive drop, suggesting they've been burning through cash, which you could have guessed given their operating losses. On the other side, their total current liabilities are around $372,000. Thankfully, their short-term obligations are currently manageable, but that meager cash balance is a big red flag. Now for the income statement, the heart of any company's performance, for the year ended the 30th of June 2025, ORIGIN reports a net loss of about $4.4 million. That is actually an improvement from the previous year's loss of over $18 million. So they are losing less money, which is a positive step, but they are still losing money. Looking at revenues for the year ended the 30th of June 2025, cryptocurrency mining revenue is zero. They completely stopped mining operations in the United States by December 2023 due to high costs. However, they did see some revenue from cryptocurrency miner sales coming in at around $39,000. Not exactly a game changer, but it is something. Compare this to the $2.9 million in mining revenue in 2024 and over $6 million in 2023, and you can clearly see the impact of their strategic shift away from mining. Their cost of revenues for mining in 2025 is also conveniently zero, but in 2024 it was almost $4 million and over $10 million in 2023. It's like they had a huge expense and then just stopped it. This big cut in costs is a major reason why their overall net loss decreased. The segment gross profit tells a similar story for 2025. It is a small positive $39,000, mainly from those miner sales. But in 2024, it was a loss of almost $1 million, and in 2023, a massive loss of over $4.5 million. They are definitely cutting costs, but the core business of mining is currently on pause. Their loss from operations for 2025 was about $3 million, an improvement from nearly $15 million in 2024. This improvement stems from the reduced gross loss and significantly lower impairment losses compared to the prior year. They wrote off about $7 million in equipment impairment in 2024 and over $17 million in equipment impairment in 2023. Those are huge numbers, showing how much their mining assets have devalued. Now, let's talk cash flow. For the year ended the 30th of June 2025, cash used in operating activities was about $2.3 million. This cash burn is lower than the previous years, where they used almost $8 million in 2024 and nearly $7 million in 2023. However, remember that tiny cash balance of $55,639. That means this operating cash burn is hitting them hard. They need that Dogecoin treasury to start generating some actual cash flow. On the investing side, they reported about $1.5 million in cash provided by investing activities in 2025. This came from repayments on loans to third parties. This is a good source of cash, but it is not from their core business. It's more like collecting on debts. Financing activities are where things get really interesting for ORIGIN. In 2025, they actually used about $608,000 in financing activities, mainly for interest payments. This is a stark contrast to 2024, when they brought in over $8 million from financing, mainly through issuing shares and convertible notes. And before that, in 2023, they brought in about $2.5 million. Let's look closer at those convertible debentures, which are essentially loans that can be turned into stock. As of the 30th of June 2024, they had almost $2 million in convertible debentures. By the 30th of June 2025, this number had dropped to zero. This means they paid off or converted all of those outstanding debentures. The report mentions that in July 2025, they issued new senior secured convertible notes for a massive $16.3 million. This is how they are funding their Dogecoin ambitions. Looking at shareholders' equity, it is a bit of a mixed bag. As of the 30th of June 2025, they reported over $3.9 million in equity. This is a significant jump from the previous year's equity of around $1.6 million. This increase is largely due to the new share issuances and the restructuring of their capital, showing an effort to bolster their financial standing. Now, no corporate decoder video is complete without a look at the risks, and ORIGIN has plenty. Under the heading Risks Related to Our Business and Industry, we see they acknowledge that fluctuating Bitcoin and Dogecoin prices can significantly impact their results. They also point out the risks of internet disruptions, geopolitical events, and the general lack of liquid markets for cryptocurrencies, making them susceptible to manipulation. And then there is the big one, potential regulatory actions that could severely restrict their right to own or use cryptocurrencies. When it comes to their shares, they have a dual class structure. This means that some shares, the Class B shares, have far more voting power than others. The Class A shares, this effectively concentrates control with a few individuals, which can limit the influence of regular shareholders on important company decisions. This is a common structure for founders who want to maintain control, but it can make minority shareholders feel like they have less say. Here is a concerning point. The market price of their Class A ordinary shares has recently declined significantly. They've actually received multiple notices from the Nasdaq about not meeting the minimum bid price requirement. They've managed to avoid delisting so far, but it is a recurring issue. This constant struggle to maintain a minimum share price is a clear sign of investor concern or lack of confidence, and it makes the stock look quite risky. This is a major red flag. The company admits to material weaknesses in their internal control over financial reporting. Basically, they don't have enough experienced accounting staff to handle complex accounting matters correctly. This means there is a real possibility that their financial statements might have mistakes that go unnoticed. They are trying to fix this by hiring more people and providing more training, but it's a serious governance concern. Let's look at the auditor's report, HTL International LLC. Their current auditor as of the 30th of June 2025 found that the company's ability to continue as a going concern was in question. They point to recurring losses, significant net cash used in operations, and a very low cash balance as major concerns. However, they also note that management's plans, including recent financing and the equity purchase facility, have alleviated these concerns. The auditors spent a lot of time testing management's business plan and forecasts, which tells you how critical that is to the company's survival. Looking at the balance sheet again, specifically at the equity section, we see a big shift. Total shareholders' equity for ORIGIN went from about $909,000 in 2024 to over $3.9 million in 2025. This jump is primarily due to issuing more shares and restructuring their capital. It's an attempt to make the balance sheet look healthier, but it's largely driven by new financing and not by organic business growth. The cash flow statement is critical because it shows where the money is actually coming from and going to. For 2025, they used $2.3 million in operating activities. This means their daily business operations are still costing them money. The investing activities provided about $1.5 million, mostly from loan repayments, and the financing activities used up about $608,000. The overall picture is a significant drop in cash balance, going from $1.4 million in 2024 to just over $55,000 in 2025. That's a huge depletion of their cash reserves in just 1 year. Looking at subsequent events, which are things that happened after the 30th of June 2025, ORIGIN has been very active. They issued over $16 million in new convertible notes and sold another $20 million worth of shares for $6 million and 30 million Dogecoin. They also purchased about 40.5 million Dogecoin tokens. This shows a clear strategy to raise capital and secure their Dogecoin holdings, even after the fiscal year ended. The sheer number of new financial instruments issued and debt raised in July and August 2025 is a testament to their urgent need for capital and their aggressive pursuit of their Dogecoin strategy. This is a company operating on the edge, trying to fund its ambitious vision with a lot of new debt and equity issuance. So what is my take on ORIGIN? The company is making a bold gamble, shifting its entire focus to being a Dogecoin treasury and building an ecosystem around it. They've successfully raised a significant amount of capital recently, which has helped them avoid immediate financial collapse. However, the risks are substantial. They are operating with very little cash, relying heavily on new financing, and facing significant regulatory uncertainties in the crypto space. Plus, that concentration of voting power and those repeated Nasdaq listing issues are serious concerns. They are essentially betting the farm on Dogecoin's success and their ability to build a viable ecosystem around it. It's a high-risk, potentially high-reward strategy, but right now, the risks seem to significantly outweigh the current rewards. The reliance on debt and equity financing to fund operations and core strategy is a worrying sign of a company that isn't yet generating sustainable profits from its business model. That's our deep dive into the ORIGIN Ltd filing. What do you think about their Dogecoin gamble? Are they geniuses, or is this a recipe for disaster? Let me know your thoughts in the comments below. If you found this breakdown useful, please hit that like button, it really helps the channel, and subscribe for more corporate decoding. Don't forget to join our Discord community linked in the description below for more discussions and insights. Thanks for watching, and I'll see you in the next one.